this is a continuation analysis of the USD CHF, which I analyzed previously, So if you can just check my previous video, I analyzed this pair and I was just anticipating a sell on this trade, and unfortunately the market went against my analysis. So the market obviously violated this structure. So right now this structure does not exist anymore. It doesn't exist anymore. It no longer exists, right? And I'm just gonna explain why I anticipated a sell on this um, pattern, So if you see the market moving impulsively like this to the downside, the market will form that correction, right? Will form a structure like this one, right? So this is the market telling you that the market is not done moving to the downside. The market will continue to move to the downside. So this is basically a continuation pattern to the downside. Whenever you see this type of a pattern, you will be having that first touch, second touch, and then third touch of the trend line, right? Also from the downside as well, right? So if you see this type of a pattern, you will be having that first touch of the upper trend line, and then second touch of that upper trend line. The third touch will always be your high probability to enter this market, right? And then the market will shoot to the downside, break out of that structure, continue to move to the downside, right? So this is what was happening right here on this trade. We can already see that we had that first touch of our upper trend line, we had our second touch of the upper trend line, our third touch would have been always been our high probability to enter this trade, and move to the downside with it. And then we would have been taken all those continuation patterns that we would have been finding from those smaller time frames. So the market will always give you an opportunity to enter or to re-enter, based on how it is moving, based on the opportunities that it is creating from those lower time frames or from the inside structures, and then continue to move to the downside. And also we also have our first touch from the lower trend line, second touch from the lower trend line, third touch will always be a breakout, until we continue to move to the downside and reach that 90% rule, so this is what I was anticipating on this trade, but unfortunately the market went against me. Also, if the market is a downtrending market, we also have the same thing. You will see the market moving in this way, and then the market will form the continuation pattern right there. When the market does this, we already know that the market, after that third touch of the lower trend line, the market will move impulsively to the upside and then break out of that structure and continue to move to the upside, because these type of structures are continuation patterns. These are the continuation patterns. So you can already see that we have our first touch there, our second touch there, then our third touch there, which is the high probability to enter the market and then move to the upside, break out of that structure when it reaches that third touch of the trend line, because we already have our first touch there, our second touch there, and then our third touch right there. So whenever you see an uptrending structure, it is a continuation pattern to the downside. The market will break that structure to the downside. If you see a downtrending structure, the market is telling you that it is gonna continue to move to the upside, because the downtrending structure is a continuation pattern to the upside. So whenever you see a downtrending structure, the market will always break to the upside. So that is how I trade the patterns, and that is how I spot these entries. But right here can already see that we have that resistance level right there, that I can already see that the market has a great potential to move to that level before we can see this market moving to the downside, before we see it moving to the downside actually.